Welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide online divorce mediation and valuation services in St. Louis, Missouri. Today, we will discuss cryptocurrency and divorce with Carolina Martinez, a certified fraud examiner, certified cryptocurrency investigator, and a cryptocurrency accountant in Miami, Florida. Wherever I'm investing in the cryptocurrency, are they reporting that these transactions are happening, or am I responsible for self-reporting or providing that information to my accountant?
Right now, there is not a lot of guidance from the IRS, but you are responsible to self-report. There are some exchanges that are now reporting their transactions to the IRS. A lot of them, we don't know which ones are those, but you can guess the ones that are already publicly traded, like Coinbase. Uh, some that are already in a court process or in a case investigation from the IRS. So I always tell my clients, do not wait for the IRS to come after you. Just self-report it. It's better for you to pay what you have to pay than just go and pay penalties and even have a more complicated case if the amount of money that you're hiding from the IRS is a big amount. You know that it could go even into criminal charges depending on what type of transactions and your intentions for hiding it. So I always tell my clients, self-report it. You are obligated to self-report it. Do the right thing. Do not wait for them to come after you.
Mm-hmm. And there's no difference currently in the tax rate regarding crypto versus other capital gains. Do you hear anything? I think, right? Do you hear that anything might change?
Yes, there are right now. There is not like I said, there is not a lot of guidance, but they are working right now. There is a bill in Congress that I'm not gonna go into detail right now because it's more complex. But yes, the way that we could save money in taxes with the capital gain right now in crypto might change early next year based on what the Congress is discussing now. So basically, what they're trying to do is basically see cryptocurrency more like a stock where you cannot do what we can do now. We can do the loss harvesting rule in cryptocurrency, which means that you can sell a coin at a loss today and buy it right away so you can save money in taxes. With stocks, you cannot do that. You will have
Mhm.
to wait 30 days to buy that stock again. So if they're saying they're discussing it in Congress, if they change the rules beginning of next year, then crypto is gonna get a bit more complicated. and, but let's see that they just talking about it. Probably they will get it will get approved. Probably it won't get approved. But since there is not a lot of guidance out there, um, we try to help our clients as much as possible, and we are very conservative in the way that we do our reporting because the more conservative you are, I think the better you're gonna come up if you have any issues with the IRS.
Mhm. Yeah, and I think everybody's, even legislature is trying to figure out how to work with this, and they don't always think about the accounting effects of some of the things that they do.
And the thing is that a lot of them don't understand it. A lot of government agencies do not understand how cryptocurrency works. So that's why it's very complicated for them to actually come up with something. Every time that I get a client complaining about it, I'm like, okay, but do you know how it works? Do you actually know how it works? Because a lot of people, they don't know how it works.
Mm-mm.
So they are relying on people that either have little knowledge or they just trying to figure it out. So
Mhm.
I do think that they're gonna make a lot of changes. I don't think it's gonna happen soon, within next year, but it will happen sometime.
Mhm.